So how will Fed stance impact market bulls? Insights on dollar, gold, and silver. Hello, everyone. Welcome to Midweek with India Charts. We have Jay Vora with us, and this is Shilpa Raidas.
Yeah. So how are you doing, Shilpa?
I'm doing very good, Jay. How are you?
I'm fine, thank you.
So Jay, I'm very excited that we have our midweek once again. We had a technical issue last week, so we could not have the midweek. But I have got some really hot questions for you, so let's begin. Jay, what we have seen is that the Fed has kept the rate unchanged and the data points haven't been so favorable lately. Can this derail the bull run in the equity market, Jay? And what is your view on the dollar index, gold, and silver?
Right. So, firstly, I mean, we had the Fed meet yesterday, and from there, one of the key takeaway was that maybe we are not getting the rate cut anytime soon. So, Street was expecting 2 to 3 rate cuts. I mean, at the start of the year, it was 5 to 6 rate cut that the Street was expecting. Then it came down to 2 to 3 cuts, and now probably, many are factoring in either one rate cut or no rate cut. Okay, so in that sense, there is some adjustment that has been done, in terms of expectation of the people. But look, one thing that broadly people has to understand is the direction of the policy making. Okay, so now I think more or less going by what the Fed has said, it seems like that the rates that are prevailing right now, there may not be a hike. I mean, further hiking of the rate, though in worst case scenario, many people are expecting a rate hike also to happen. But the sense that we get from the Fed speech is that they may not do rate hike anymore. The worst case probably can be that they will keep the rates higher for longer. Okay, and if that happens, then that can lead to some sort of slowdown. But honestly, I mean, if you would have asked anyone 1 or 2 years back, like the Fed will hike rate from 0.5 to 5.5 or so, and still, market will be so resilient. None of them would have predicted this scenario. Okay. Now, because of the higher rates, the equity markets are sustaining. That is telling you that the economy is able to take higher interest rate. So surely, I mean, because of the higher interest rate, there can be some slowdown or cool off in the growth that can happen. But so far, I mean, all the indicators or the data points that we get from US, these are not suggesting any recessionary type phase, because the job growth is still strong, the wage growth is there, and these are all headache for Fed. But Fed mentioned very clearly that the policy rates are restrictive enough for them to gradually cool off this inflation. Okay, but it is just that they were expecting the inflation, the core inflation, the core CPI basically to fall sharply. That is not happening. Okay, that is happening at a slower pace, but it is going in the right direction. Okay, that is what they are broadly saying. So for that, now the key thing is that they might keep the rates higher for longer, but at the same time, this might be somewhat relief for the market that Fed is not looking to hike rates. Okay, so ultimately, I think rates have reached the peak, and eventually they will come down. Okay, so that is the part that the market is focusing on, and hopefully the Fed pull off this phase, because most of the people are expecting a recession will happen sooner or later. I mean, that happens or no, that needs to be seen. But at this point of time, I mean, this is what is happening, fundamentally, where data points are not deteriorating that bad. I mean, growth has slowed down, GDP did slow down a bit, but it is not like that there is no growth as such. Okay, so that is happening, so that is a positive point. Now the other thing that is happening is that with yesterday's speech by Fed, they clearly mentioned that they will now, I mean, whatever QT they were doing, that it was quantitative tightening, that will cool off a bit. I mean, the quantum of that will cool off a bit. And that in return means that there will be liquidity that will get injected in the market. Okay. Because anyways, they are doing many other stuff from behind, like, repo rate buying and all that. I mean, from there, they are purchasing the bond and all those things. वो back of the door तो बहुत कुछ
हाँ.
चल रहा है. So that way, broadly, liquidity will start pushing in the system. So that is broadly positive for equity because, from a very tight monetary policy, Fed is saying that we will cool off the QT, I mean, slowly, gradually. And also the good part is that they are not right now in a mood to increase the interest rate. Okay. So now, because of all these fears, Dow Jones had already corrected around 600 points a day
Mhm.
prior to the policy. Okay, so let me quickly jump on the chart. And when you see this, when you see the S&P 500, it had actually seen a big correction just prior to the Fed meet. Okay. And after that, there has been some more correction yesterday. But broadly, look, what is happening is that when we see multi-time frames, okay.
Mhm.
So over here, you can see that the 20 week is still not breaking on the downside. I mean, it is still hanging on over there. So yes, surely if this breaks, there can be some correction that can be expected. But it is not that charts are weakening very significantly. Okay. I mean, it is definitely weakening, but one has to keep in mind that we had seen a runaway rally over here. Okay. And from there, we are weakening. So at this point of time, the worst case that I can think of is probably around the 40-week exponential average or maybe towards the lower band. Now, I know many people will say, okay, oh, what will it do to the emerging markets? Will emerging markets correct or no? So that will come to in just a while. But broadly, this is what I feel that if the 20-week breaks on the downside for the S&P 500, then there can be some cooling off that we can expect in the coming days. But that's about it. I mean, I don't see at this point of time a risk of a major correction. Okay. And all we end up doing is that we complete the cycle. And once again, jab wo next bullish crossover dega, momentum indicator. So that's where, the new leg of the up move can unfold. So this is what our base case is right now. Now, when
Okay.
we look at the dollar index, over here, we were anticipating that the up move can continue, but it is faltering, I mean, at higher levels. So now, the thinking would be more that, this is just a corrective pullback because even over here internally, it is very difficult to count impulse. I mean, at that point of time, because, bond yields were rising higher and so on.
Mhm.
So that time, the fear was definitely there that the dollar index may rise higher. But now, actually, the way the Fed language was yesterday, okay, it is making us feel that probably, this was some sort of counter trend pullback that has happened, and now we would actually start waiting for a reversal. Because one more thing is there, if you look at the gold and silver, I mean, gold has broken out, and I don't think there is any doubt over here. Okay. So even if you remember, I mean, 2 or 3 weeks back when we were doing midweek, one of the things that we had mentioned was that dollar index is tricky right now. So that's where we'll watch gold, silver, and commodities. If they are showing green shoots or they are showing signs of revival and up move continuing. If that happens, then maybe dollar index can go down. So this is what we think right now, that this 5 wave rise which was there in gold, that got over, and right now it is in a corrective phase. So at some point of time, jab RMI pickup hoga and it ends up breaking above the averages, that's where we'll start expecting next leg of up move in gold. Similarly pattern, because this entire part in silver is actually a base triangle over here. Okay, because everything is 333 in this case, and it is only that this is basically A, B, C, D, and E. So this is how I thought of it. And यहाँ पर bottom होके, this is a 5 wave rise that has happened. And for that 5 wave rise, we are seeing a pullback where we are back towards the 40-day and the lower band. So at some point of time, this corrective phase will complete. And when we get a bullish crossover next, that would be an indication of next leg of up move. Okay. So at that point of time, broadly, I would think that if gold and silver are rising higher, then dollar index will eventually come down. And this exactly is what is happening in many of the emerging market as well. Like if you take Hang Seng index, okay, that has started to rise higher and that is making higher highs now. As you can see, I mean, this has been a rank out underperformer for very, very long time, but now it is coming back. Even if you see the Chinese index, so wait, over here I have the emerging market basket. So many of the index, if you see, they are on a roll. Like you see over here, Hang Seng, even Chinese index have not corrected much. So over here, you might see some declines that has happened, but broadly they are towards the upper end of the range. Okay, even in Taiwan index, it has broken past the previous high and it is rising higher. So if you see all the emerging markets that are, I mean, if you see their charts, so basically they are consolidating at higher levels. Okay. And once we get a breakout over here, that will be furthermore confirmation of a uptrend that is likely to continue. So I think, there will be a point where we may end up seeing a reversal in the dollar index, and that will lead to rise in gold, silver, commodities, emerging markets, and so on. So that is the trend that I'm expecting probably in the days to come. And what right now we want to see is that US market is relatively weak right now, so they may end up seeing some sort of corrective phase. But I don't think that we should be too much focused on that, because at this point of time when the US market was rising relentlessly, many of the emerging markets and all had corrected. Okay, so that shift or that rotation can definitely happen. So again, we have to go chart by chart. And if we look at the emerging market chart, that looks very promising. Even if we see gold, silver, they have done a decent correction. Now over here, I mean, when do they turn around? That is what we need to see. But they have reached a point which is good enough because the cycle is complete and they are back to the lower band and 40. So these are good times to watch for reversal. And once that happens, and if we get a confirmation of dollar index also turning around, I mean, going down, then that would be even more great confirmation to look out for.
Wonderful. That was very well explained, Jay. Thank you so much. We got a lot of perspective now. Coming down to the indices, Jay, we know that all the major indices have broken past the 61.8% retracement level and have once again made a new all-time high. So is there a room for more upside? And if so, what are the sentiment indicators on strike also indicating right now, Jay?
Right. So, I mean, because we could not record it last week, but one of the things that we were watching out for was a break above the 61.8% retracement level. Okay. So that has come by, and the Nifty index has not only done that, but broken past the previous high by a few points. Okay. So that's where, now I mean, please try it. I mean, users must try to understand that even while we are, trying to look at the scenarios, so we are considering the probabilities. Okay. I mean, at this point of time, we were skeptical of Nifty index because it was hit. I mean, it was, touching its important resistance level at that point of time. So from here, a correction could have occurred. Okay. ये यहाँ पर ही खत्म हो गया, but there was no reason for us to think कि ये correction यहाँ तक या or it cannot go much more deeper. So those were the risk at that point of time. Okay. And now what has happened is that Nifty only corrected, say, somewhere around 1,000 points from the top. And now that the key resistance level is breaking on the upside. Okay. So now we are thinking of a bullish scenario. Now, what we want to see though is, breakout from this narrow range in which the Nifty has been hovering, because this has been very irritating, honestly. Because what happens is that we are at, I mean, when you reach a critical resistance level, you will end up thinking कि oh, यहाँ पर से तो बहुत बड़ा correction आ सकता है. Okay. So far, what has happened is that वहां से, there has been correction, but not to the magnitude what we would have expected. Okay. So there has been correction, but each time now what is happening is that we are not getting a follow through move. I mean, 61.8 is breaking out on the upside, फिर ऊपर जाता है, then again it falters. It is going over here, but it is not picking that momentum. So my guess would be that once we get out of this range, okay, that is on the upside, this level is somewhere around 22,920. I think once that is broken on the upside, that's where we might end up getting a real momentum, because then what this may start looking like is a sideways consolidation which lasted for 3-4 months. So that is how honestly I'm thinking about it. Till that doesn't happen, I mean, we may keep getting back and forth and think what the wave count is, but I think the real move is gonna come when the Nifty index surpasses that. And not to forget that there are a lot of sectors and indices which are seeing rotation within that. Like if you see, I mean, we had been talking about this, that PSUs are actually they had broken out from a 12-13 year kind of range, and they are sort of continuing their uptrend. So it doesn't matter what Nifty is doing, but because there are many other sectors and stocks which are doing well. So I think that is how one should be looking at it and chasing relative outperformers. Okay, because that is what is working right now. The only index that I can see is Nifty IT, which is not performing that well, which is sort of weakening. The good part is that it has come back towards the 40 week and it is around the lower band. But now, if it starts sustaining below the 40-week average, then this may not really be good sign. So what may happen is that if the Nifty rises higher, this may end up rising much lesser than Nifty. In that sense, it will be a relative underperformer. But that's where, I mean, like I told you, sectors like metal, which have been outperforming and making newer highs. If you see sectors like PSU, they have been making new highs. So these are probably the place where people would want to chase the momentum, and that is how we should think about it. Then in the short term, we will obviously, look at the sentiment indicators and also navigate that. And when we look at many other sentiment indicators, like say, for example, if we look at the client data, so as people now might be aware that whenever the client positions are extremely long, okay, that's where usually the bottom occurs. So यहाँ पर भी you can see that somewhere over here, उनका I mean, client's long position was very high, and that was calling for a bottom in the Nifty index. And from there, the Nifty index has bottomed and it has rallied. Okay. So again, this is in midway, and usually we end up seeing cycles playing out. Okay. So this time around as well, I would expect that the clients will eventually cut their long position. And at some point when the market gets very much overbought, that's where they will end up forming more and more shorts. Okay. But we have to reach to that point. As of now, I don't think we have reached that point. That means that there could be further more upside that can be expected in the coming days and weeks. Even when you see the FIIs who actually trade in the direction of the trend. So over here as well, you can see that, when the Nifty is rising higher, they keep increasing their long position. Okay. When there is a correction, they decrease their long position, and that's how they play. Right. So over here, recently, you can see that the FII's net short, it bottomed out somewhere around, I think, 240,000 contracts or so. Yeah. So this basically we have adjusted because the Nifty lot size has got adjusted from 50 to 25. So accordingly we have adjusted the range so that there can be a like-to-like comparison. So in that sense, when we see the FII short position, it bottomed out over here, and from there they have been creating long position, and that is also leading to rally in the Nifty index. So I would imagine that when their position reaches around this point, that will be the point where we need to be a little cautious. But until then, we have that runway on the upside, which we can see probably in the coming days and the weeks. And then, of course, when we look at the breadth, so yes, in the short term, we are hitting this line. So earlier also, if people remember that somewhere over here, when the index had bottomed out, over here, there were multiple indicators that had reached in oversold zone. Okay, so over here, then the the expectation was that they will go from one extreme to the other. So the breadth is good, and in fact, the breadth is rising higher. That is telling you that there is much more broad-based participation that we are starting to see right now. And in fact, when we look at the 40-day advanced decline ratio, okay, that also reached towards this oversold zone, and that has now started to inch higher. So when all these sort of indicators, reach those overbought zone, that will be the time that, probably we need to be a little cautious. But right now, most of them are somewhere in the middle. That is telling us that there can still be room on the upside, that the Nifty index can see in the coming days and the weeks. So obviously, everything may not be a straight line. There will be pullbacks from time to time, but that's about it. I mean, we are not in a scenario where we are reaching to a very big extreme when we look at all these indicators. Now, the only one thing, that do sort of bothers us, but because when we look at the data from a historical perspective, that is future OI by index, but mind you, this is a very long-term indicator, okay, which means that when these sort of indicators reach an extreme, eventually what happens is that there can be topping out process that can form, because over here you can see it actually took 2 years to eventually top out and then decline. But over here, breadth had started to narrow. So some of these sort of things can happen, but there is nothing to say that this indicator cannot get into a new range because of shift in dynamics and so on. So that's where, when I mean these long term indicators, we are very mindful of that they are reaching an extreme. But at the same point, I mean, there are many other factors which are now turning positive for the equity markets, and especially for emerging markets, like we mentioned, that Fed, which is I mean, giving a little liquidity boost to the equities. I mean, unka jo tightening ka quantum hai, that is reducing. That in itself is actually good for equity. Then the other thing is dollar index and so on. So those macro things are falling in place. So that's where I think that there can be some time that can be spent at higher levels, or maybe some record readings can also come. So until and unless the biggest point is that as long as you don't get a price action reversal on the benchmark indices, okay, till then you got to be bullish, because that is what these all indicators seems to be suggesting. Okay. And that's how we will continue to navigate this phases based on, with the help of these indicators. So broadly, to sum up, in fact, to all our viewers who follow Indiacharts, and those who don't even follow, but we end up writing such reports once in 2-3 months or so. So this is basically a long short report where Rohit sir has extensively explained all the scenarios. As you can see over here, I mean, there are 30 charts which are there. There is 5,000 words which has gone in this report to explain the entire thought process with what we are seeing right now. And what is dollar index telling us, what are other various chart telling us. So this will sort of help user to get a perspective. So what we have discussed today was broadly a brief of that. But this report has extensively explained all the scenarios that we are looking out for, and what will be the watching point, where we might end up being a little cautious, and what are the confirmation points that we are looking out for. So these all important factors are highlighted in this long short report. So I would urge people to go through this report to understand what is happening across the world, and what are the charts telling for different EMs, DMs, bond, commodities, and so on. So yes, so broadly that's about it. I mean, just to sum up, what we expect is dollar index to weaken eventually, and that should lead to rally in commodities, emerging markets, and so on. So that is the broader thesis that we are working with, that should eventually play out. So we are waiting for some confirmations. We don't have it yet, but the macros are in place right now, where we end up getting those triggers. And for that, obviously, we'll be watching out for dollar index, bond yield to confirm, currencies, and so on.
Wonderful. Thank you so much for that, Jay. That was very well explained. I'm positive that our audience has gained a lot of perspective from it. Talking about perspective, for our option trader viewers, we have got just about the webinar they have been waiting for. It's titled as How to Find the Right Opportunity for Options Trading Using Strike OI Insights. We're having it this Saturday on the 4th of May at 10 a.m. in the morning. So I'll leave a link down on the description. It's a free webinar after all. Go and sign up and book your seats right away. So basically, this webinar is purely for option traders who are looking for the trades between 1 to 3 days. So don't miss it, because this is just what you have been waiting for. I'm mentioning again. Also, like Jay very well explained in details, the long short report is out and it is live on Indiacharts website. It's titled as Much Ado About Nothing. So please log in and read on your desktop, or you can also read it on Indiacharts app. It's the 30 most important charts, and with 5,000 words of explanation, and it's all that you will need for the rest of 2024. So I'd say it's rather important. And of course, I'll leave a link down of that as well here on the description. That was a wonderful midweek session once again, Jay. Like always, you are just awesome at doing this, and we are happy to have this perspective every week from you. And thank you so much to the audience as well. Do subscribe to our channel, and you take care of yourself. Yeah, see you next week. Bye-bye.
Thank you.